Hey everyone, welcome back to CryptoCache. Thank you so much again for joining me here. I hope you're having a phenomenal day. Taking a quick look, of course, at the crypto market overview, discussing some important stuff here, specifically some ETF net inflow and some key events this week here in crypto. Specific things you want to know and kind of understand how they pertain to the market. And then obviously, welcome aboard to those who are new to the community. Thank you again so much. We got almost 100 subscribers over the weekend here from our videos there. Awesome stuff. Welcome to the new way of doing things here. And I'd say that simply because I'm not a emotional idiot. I like to look at things abstractly here and make sure we understand specifically the technical details as well as the backend data too, and obviously touching on fundamentals, but no emotion, if you will. We're going to look at the backend data here too as well with CME futures, some CME gaps, of course, the macro structure here with a potential double top pattern, and obviously how Bitcoin dominance and stablecoin dominance are coalescing together here to provide us with a potential breakout, and then obviously the 7 in the last 30-day timeframes here for liquidation. There's a lot of liquidation on the upside here. Decent chance we see a continuation just based on liquidation levels. Obviously, that's not the reason we take trades here, folks, but we do want to make sure we understand specifically what those look like. And we're also going to identify some outliers too. And I think there's some altcoins here that we're looking at here today that are going to be very, very responsive to this current uptrend. So we'll take a look at that and much more. Be sure to stick around. All right, folks, before we jump into the back end, juicy liquidation data, as per usual, just want to kind of start off with some light stuff here, more so fundamentals to kind of give you some foundation of what's going on. Let's start with the polls first. Roughly out of 15 votes in 22 minutes, still very new, of course, we got about good, almost 65% of you think we're going to go higher, and the other think we're going to go lower. So no one so far thinks we're going to go under 100,000, but majority are thinking 117 to 118. And that's kind of that local resistance shelf. I think there's a decent chance we do see that here soon. So we'll talk more about that, obviously, and the reason for that. And then if we jump over to crypto YouTube, we can see that after, 23 votes, majority of you are feeling the same. About 75% of you think we're going to go higher, with majority of you thinking we're going to see 117 to 118. All right, so let's take a quick look at some fundamentals here, just to kind of give us a foundation of what's going on. First of all, these are kind of the key events here for this week. And if you note, there's two things that are really important, I feel, that have the most impact on crypto is, of course, the Fed Chair Powell speaking on Tuesday. That's tomorrow. And then we got, of course, the 10% earnings here for the S&P on Friday. So those are two really, really big deals there. And if you're not familiar, too, with, federal, or I always like to say federal, but it's Fed Jerome Powell. He's basically delivering a keynote address, and he's going to talk about the sustainable 2% inflation targets. And that could very well create some divergence or convergence in the market, because oddly enough, things can work different than you might think, actually, when the price action responds either poorly or positively to it. So when he starts speaking, take a look at the charts. It's always an interesting dynamic to see how that works. And of course, Friday as well, just to clarify, about 7-10% of the total index earnings are being reported on Friday. So that's going to have a major impact on crypto too. So just some things to be mindful of. All those details are on my Twitter, Telegram, and/or Discord, but more specifically, the details are on our Twitter. Taking a look here at the Daily Dumbass, this is just something that I have here for my community in our Discord. Feel free to join on up if you want. Links down below for that. There's no cost, obviously. If you want to become a better trader, CryptoCache.tech is a site, or join me with our Uptober sale. Oh, sorry, we rephrased it to the Dumptober sale. Comments down below if you're curious about that. But this is a stupid thumbnails category that we have now, just to kind of get highlights, other influencers like myself. Unfortunately, I'm in this demographic now, which is terrible. But this is my competition. These are the ones stealing all my views. So look at this. Absolutely a fuddled look on his face. Looks like he's getting high on his own supply. So I'd be very careful trusting people like that. Maybe there's some good credible information there. I'm not sure, but I don't know. It just seems like a red flag to me. Now, looking here at the order blocks. The order blocks are interesting here today because we're seeing some pretty large buy orders and sell orders, but they're accumulating close to the current price point. So we can see that $115,000 resistance range. There's a lot of sell orders above the price. We basically have more sell orders and buy orders below. So it does imply we have some resistance above the price at that 115K range. Now that can change, of course, very quickly. But for right now, with it being kind of tighter margins, it leads me to believe that we could actually see a squeeze or a push hard, because oftentimes once all those orders are filled, the price action can run fast. Now, this is the CME futures here, just to kind of clarify, because the CME futures weren't open yesterday when we covered this last. So just kind of some perspective, we have an older CME gap from Solana that's filled, no new or recent CME gaps present. Ethereum is really the only one that has the most recent one here, and this was just filled here, or sorry, just created rather, from Friday when it closed at 38.70, and obviously wicked down as low as about 40.50. So there is a CME gap there at 38.80 as a close approximate. You could just say 38.75, 3900. It's essentially below the price, implying that we could see a continuation lower for Ethereum. Same thing with Bitcoin too. People are surprised to see this here, but believe it or not, CME gaps are created when the futures close on Friday and reopen on Sunday. So all that nonsense happened on Friday afternoon. So all those candle wicks, all those aggressive wicks down, truly never filled that CME gap, believe it or not. So that's still present. The previous one here from a few weeks ago, back from September 26th, we can see the 110 to roughly 111,000 CME gap there. So that does incentivize the price to continue a bit lower here for us once we hit our resistance. Speaking of lower potential, this does kind of tell us that there is a double top, of course, for Bitcoin forming. It's a very, very similar pattern to before. So I just like to highlight this. Patterns have a tendency of repeating themselves, but they don't have to, right? So the concept here is that we want to be mindful that this could happen, but we don't want to attach ourselves to it and just get super crazy with shorts, right? Now, obviously, hindsight's 2020. You could have shorted recently and had an awesome field day, but when we look at this here, there's still a lot of positivity. We're over 50 on the RSI. We're over these key level supports at the 108 and 100,000 even mark, right? Those are kind of areas with our super trend, but also aligned with our simple moving averages. We're also above our 20-day SMA as well. And until we close below that, that's roughly the $113,000 range, then we can still presume this trend will continue higher, right? So a trend is not broken, until the trend breaks, you got to presume it will continue. That's kind of the concept there. So I'm still mostly bullish on the daily time frame, the weekly time frames. I just want you to understand that we are in a position right now where we could very well progress lower. So this week, depending on how we close this week, could determine a lot. All right. So we're just going to pay attention to that. Now, when it comes to dominance here, there's not too much to really note. This is pretty much everything's kind of squeezing and compressing and starting to kind of draw dead. So there's not a lot of activity in different ways. In other words, as one goes up, the other comes down, they kind of start to equal out. So until we see a true breakout here, there's no real reason to kind of overthink this. It's pretty straightforward. Altcoin dominance is still down, but it didn't go quite as far down as we expected it to. It rallied back quite quickly. And then there's not a ton of money in stablecoin right now, which is actually a good thing. And also Bitcoin dominance isn't going, shooting straight up. So that's generally positive for altcoins. Okay, so not a bad thing at all. I like to see that. Honestly, in general, it kind of implies that you can actually trade within the ranges. So we're going to be looking at some range-bound trading, honestly, this week, just based on the way that things are kind of shaping up here. We still got to wait for the established ranges to happen, but once more, it is something that we got to kind of be mindful of. Now, looking at the last 24 hours of liquidation, we can see the general outliers here. 116,300 is the higher point, and roughly 113,000 even is the lower point. So we're kind of smack dab in the middle of that. Nothing super amazing there. But the more important stuff, I would say, is the macro liquidation, because these are areas, because when the price pulled back the way that it did, shorts are still in play. So there's a lot of shorts still happy with their $124,000 liquidation event, right? The odds of that happening are pretty low. But as the price continues to increase, they start to close their positions and things start to move differently. So truthfully, with there being more liquidation above the price, that does provide more incentive for the price to go higher. The 30-day also reflects a very similar circumstance there. There's a lot of leverage to the downside still, based on the simple fact that folks were able to buy that dip and get pretty successful, and they're still holding the long positions open. So to me, when I see a slightly larger amount of liquidation to the upside, that tells me that we're probably more likely to go higher. And if we zoom in a little bit here, this is the last 24 hours, we can kind of just see, I'll pull up a better chart for us, but 116,300, there's that number there for us, kind of letting us know there's a big chunk right there, and that'll probably be the next target area for Bitcoin if the price were to continue higher. A lot of emphasis on the word if, right? What happens tomorrow when Jerome Powell starts speaking? That's going to be a big deal. What happens on Friday when our earnings report come out? Those things also factor in. So we look here, of course, at Ethereum. We want to double check and just kind of see if there's any specific outliers here with liquidation. A lot of times this can identify some outliers, kind of just basically letting us know which coins may or may not be performing better than Bitcoin. And we have a lot of coins right now kind of close to this 1-to-1 ratio. Like Bitcoin, well, we have a little bit more shorts liquidated than longs, and same thing with Ethereum, they're pretty close, basically telling us that these two coins are moving synonymous with each other. Solana is the opposite there, where we have more longs getting liquidated, essentially telling us there's more selling pressure on that coin, right? Maybe not the best buy. Obviously, there's other ones too. We want to look at BNB as per usual, looking like it wants to continue lower. And then of course we look at others. This is the bigger one here. This kind of like excluding, I think, the top 100. And this basically tells us that there's a lot more longs and shorts getting liquidated in the last 24 hours. So there's still more. They're still struggling more, right? So it does kind of tell us that you probably want to avoid trading those coins based on the simple fact that they're not performing very well. And when we take a look here, is our altcoin season index kind of letting us know that we are at 1.6 trillion in liquidity rather, basically the total market cap for altcoins. And this is the top 100 market cap. And this is a good sign here. 1.6 trillion is good. It kind of lets us know that we're still in decent shape. But as you can see, a lot of coins here. I mean, if you compare this from a week ago, there was only probably like 20 coins in the red. Now there's most of them in the red. So the only reason why this is still high is because there's some super profitable coins that are on here, such as Aster, MYX, Zcash, all those too. But the concept here is that with altcoin season index being low, that's generally not a great sign. It tells us that altcoins got hit pretty hard here, but we also have some sustainability with market capitalization. So that could be that shift in momentum that we're starting to see. So if we start to close in our weekly below that $113,000 support, I think we may actually continue a bit lower, and altcoins are going to underperform moving forward. So it doesn't mean you short your shirt off. It just means that you want to be prepared for the price to pull back in general, because there's kind of a bit of a weakness. Speaking of weakness, we look at fear and greed index. We're at a 40 right now. It's still in a fearish type of scenario there. So all the more reason why the price is pumping up. That's exactly what the whales do. They instill fear in the hearts of traders. And then once everybody stops trading, they just buy it out. I'm willing to guess that whales are very active right now. And in fact, we can actually take a look at that and see if we look at our backend data. We'll take a look at that here in a minute. But really quick, we got once more liquidation at 116,000. That's the local highest. These are basically the medium positions for liquidation above the price. There are some heavy liquidation levels at about 118. Those are high leverage. And then if we look at the average top trader, we're seeing more shorts than longs being entered right now. So the top traders are shorting right now this little continuation higher. Now they're using proper amount of margin, in other words, more margin than previous, letting us know that there's more confidence the price will turn around. At least, once again, these are just larger position traders. Now, when we do look at this here, when we look at the 100,000 to 100,000 to $1 million positions, we can see it's kind of drawing dead here. So there's kind of the whales are sort of battling it out and not really figuring out who wants to do what. So while activity is still higher than it was over the weekend, we can see retail is pretty much flat, and it would explain that I think there is a holiday today, if I'm not mistaken. And then of course, true retail, the low position sizes, these are basically retail traders, the average trader like you and I, they are trading a lot right now. So typically when you see average retail traders taking a lot of positions, then you can oftentimes see a reversal. So we may be getting closer to our tentative top. Let's look at the open interest and just kind of recognize there's a lot of support at 113 to 112. This is kind of the rough estimate there, but the concept here is that that's more of a support range for us, but it also incentivizes the price to go lower to that range. So we could very well see a retest of that level before the price legs up. That's ultimately what we're looking for, honestly, so that way we can take along with more confidence, essentially seeing that previous high working as a new low. That's usually what I like to look for. We haven't seen that yet, but once more that could happen with that support range. Liquidation short delta is still quite high to the downside. We are at about 20 billion right now to the downside, basically telling us there's 20 billion more in short liquidation delta than long. So, the shorts still feel pretty safe with their positions. All that said, there is liquidation once more. 116 to 117 is that next chunk. So The price of Bitcoin does look like it's working into a descending broadening wedge pattern, or perhaps even a bullish type of flag pattern with this lower high and lower low pattern. So there's a decent chance we do see potential pivot and bounce off the 113 range to that 116 as the next potential target, or it just continues to leg up. But the concept here is that there's more liquidation above the price than below in the last week, and I think that short sellers right now should be very careful. So let's take a look at the daily time frame and just kind of see where we're at. Let's go ahead and double check the RSIs. We're still under 50 on the RSI, still haven't broken back on the bullish side of things. We can also see that money flow index is quite high, but it's factoring in the last 14 days. So it's really a false positive because the last 14 days have been trash. Like we're at 110,000 roughly, roughly 2 weeks ago. Well, then we went up to 126,000, then we went right back down to 110. So that's garbage if you ask me. Just saying. Anyways, taking a look here at MACD, we can see it's diverging. Stochastic's trying to swing up. When we see this combination, it's generally a false positive, letting us know that nobody really truly knows what the hell is going to happen, right? And that's just kind of common in these kind of macro structures that hit the old reset button. Okay, so truth is those indicators are very unreliable, which is why you kind of look at smaller time frames and you understand also the top end liquidation data too. So with us knowing there's liquidation above the price, but also resistance above the price, there's a decent chance we do see a short squeeze moving forward, but there's also a greater chance that we see the price pull back on the short term. So all that combined, we look at this and we compare that with our money flow index. MFI is once again going to look at the last 14 candles. And as we can see, a lot of those selling candles have dropped off. So the money flow index is spiking. That's in a lot of ways a false positive. Oftentimes you'll see that on Mondays just because of the last, the weekends are dropping off, so to speak, giving us an indication. But we are seeing a stochastic divergence with a MACD convergence. So this is, again, one of those inverse scenarios kind of letting us know that we've tentatively topped out. A potential for retracement is higher. So what we're going to be looking for here is how do these altcoins compare to Bitcoin, specifically with a side-by-side comparison, so we can understand kind of what they are, how they're performing versus Bitcoin. Because a lot of times, the way that the microstructures work out well will tell us how they're going to perform moving forward. So we're going to pay attention to that. So be sure to stick around. In the meantime, Bitcoin is kind of a mess. There's no other way around it. But I do think we're going to see 116 and 117 first, and then a potential retrace to that 113, 115K range. But we will see. Time will definitely tell. Let's take a look at the next one. If you're looking for a new exchange or possibly just want to help support the channel, Bitunix has got you covered. We've been partnered with this exchange for over 2 years. It's been our fan favorite for our community, and the reason why is because they take really good care of you. They offer trading reward bonuses as well as a reduction in fees. Best exchange I would recommend at this point. Link down below for more information. All right, folks, let's take a quick look here at Ethereum to kind of get baseline, see where we're at here. We'll jump into the backend data and then just do a quick comparative analysis and kind of see how the smaller timeframes are looking. Ethereum is looking fairly similar to Bitcoin just from a bird's eye view, but we'll double check that. Once more, the liquidation amount is roughly the same. So oftentimes when we compare those things together, you're going to see synonymous behavior. So if you're considering a long on Ethereum, make sure you understand what Bitcoin's going to be doing, or base your trade off Bitcoin more so than Ethereum independently. Take a look here at the back end. Let's go ahead and do this. Let's go ahead and refresh our screen here. We're actually going to go with some lower time frame open interest and see if that kind of helps us see anything here for us. Because when we look at open interest, we want to double check some areas of support, which we can see 40.50 and 39.70 are those two areas. So if you're going to remember a number, 4,100, 40.50. and 39.70. Those could be some good dollar cost average targets if the price were to pull back, just based on the simple fact that open interest not only works like a magnet, but it also works as support. Okay, and obviously inverse as well, resistance above. Take a look here at liquidation delta. We're tapering off from 35 billion to 20 billion. That happened in the last couple of hours. So actually maybe not a couple hours, probably last 24 hours, but that is a significant shift here, kind of letting us know that we are dissipating with the amount of shorts, and they're starting to either secure profits, close their position, or get squeezed out. And we look at the smaller time frame for ETH. We want to double check here. Let's actually just stick to the 7-day narrative here and kind of see what's going on. There is liquidation at 42.40 and 4,300, a $3 billion chunk at 4,300. So if you see a candle wick up to 4,300, I'd expect the price to pull back from there. But it's respective to the $116,000, $117,000 resistance range or liquidation range for Bitcoin. So hypothetically, shorting at 117 and shorting, that's for Bitcoin, and then shorting ETH at 4,300, they may be good considerations. Once more, we have a ton of confluence at 4,300 for this coin, therefore reinforcing resistance at that range. The main thing is that point of control at 4,300. That's a really big number. So if you look here, we can see that is that significant resistance for us. We got to treat it as such until we get back up above. Let's do a quick comparison here on ETH and kind of see. It looks pretty obvious to me that they're very similar. This is a 15-minute time frame, by the way. So if you look at these two charts, they look almost identical. So I don't really trust taking along with ETH versus Bitcoin. I mean, you can see, of course, a slight amount of divergence here in the last couple of hours, where we can see we're retesting our local high here, and Bitcoin isn't even coming close. So ETH is starting to break free from Bitcoin for the moment, but it's still a very similar structure, albeit these are still moderately bullish structures. So just keep this in mind. We do have nice little continuation potential here with these descending type of broadening wedge patterns. These usually do break to the upside, especially if they can consolidate higher than their center line here. So we'll be paying attention to that. But all in all, that's kind of what Ethereum looks like to me. I'm not super thrilled about it, but you tell me, what are your thoughts? Comment below. All right, jumping on in over to Solana, kind of double checking some important stuff here. And this coin had more long liquidations versus short liquidations. So in essence, this coin took a bigger hit than most on its pullback here recently. So we're going to double check that and then talk a little bit more about the microstructure, kind of compare this coin to Bitcoin, see kind of where we're at. Now, when we look at Solana, we want to understand the open interest ranges here. Once more, we're just going to keep the same concept here with the last 7 days of either liquidation and open interest. And if we look at the open interest, we can see here that there is a pretty big chunk at 184, approximately 185. So that's the biggest area there. Maybe secondary to that, above the price, 206, that runs synonymous with our 205 resistance range in that 200 205 level. So as we can see, Solana's trying to consolidate just before it breaks out. There's a good chance we do see a breakout here soon based on how many times it's retesting that $200 resistance range. That's going to require Bitcoin to stay in its current range and go higher. But once more, if we identify a positive correlation between the two, then that may be worth taking along. Either way, just key level here, 185 is that support for Solana for right now. Liquidation delta is, let's just go ahead and refresh here and double check. It's tapering off. We can see about 4 billion versus a worst case closer to about 8 billion, not 24 hours ago. Or so that's 12 hours ago. So the truth is, Solana's definitely getting back on track. Let's look at the last 7 days, which I already have pulled up here, and double check. There's a pretty big chunk at 200. So a squeeze of 200 to 205 makes perfect sense at this point. It will and possibly should continue if Bitcoin will go higher. Bitcoin doesn't go much higher. I think we're going to get stalled out at 200, or at least at 205 resistance. Now, touching on 205, this is that level 205 here. It's also our point of control at 203, so easy round numbers 205. And once again, we just see a lot of confluence in that range, right? We've seen a lot of resistance at 200 to 205, and this point of control basically implies that that's like a psychological support or resistance for this coin. So just understand that we come into the 203 to 204 range. Bitcoin is showing some weakness. Can potentially see a pullback for Solana at that point. Let's look at the comparative analysis here really quick to get a baseline, kind of see where we're at here. The right-hand side, once more, is a 15-minute chart, and the left-hand side is the same 15-minute chart for Bitcoin. And if you see here, you can see, of course, the last couple of hours, actually probably about 2 or 3 hours has been significantly better than Bitcoin, okay? So it's broken its local high. It's above its point of control. So those are all little things I like to look for when I see and I want to consider taking a trade that's potential breakout. Keep in mind, breakout trades are highly, not suspect, but they're higher risk in general, just based on the market that we're in right now. But if we do see a breakout here, past this 199 or $200 resistance range, 205, 206 is probably the next target there for us. Let's take a look at the macro here for Solana and just double check. Once more, we've kind of already identified our key levels here. There is a secondary resistance at about 218 if we end up continuing to run. There's also confluence there at that 0.618 fib level from our macro fibs. We also can see MACD is still on the diverging side. Stochastic's trying to swing up for the first time. Money flow index is above the RSI, and RSI is under 50. So there's a lot of conflicting information here telling us that we're breaking bearish, but we haven't yet because we're showing some strength in smaller time frames. So when we look at this here, there's a great chance we do see further upside for Solana. I would say better case scenario is 205 to 218. That's kind of the range I would consider securing profits. But once more, you want to play it tighter nowadays, the way that things are. So consider adding to your, or not adding to your position, but adjusting your stop loss higher as the price goes higher, right? Make sure you walk away in the green, because there's nothing worse than that aggressive candle wick that we could see to the downside, right? We all experienced it recently. So those are my thoughts on Solana. What are yours? Why don't you comment below? All right, let's take a look here next at SUI and kind of see what is the deal here. This is a coin I was moderately bullish on yesterday. I'm wishing in hindsight I got that long at 275, but I was playing it safer than sorry. Didn't want to have to close out a trade and a loss there. It just doesn't make a lot of sense. You're generally best to wait on weekends when volume is pretty funky. So let's take a look at SUI and kind of just get us a little detailed view here at the last 7 days and kind of see. And just to clarify, if you see the amount of open interest here, you can see the significant gap here, right? And that's what happens when candle wicks down so hard. Like we came down like 56, 57 cents for this coin. So the data can be skewed in a lot of ways, but the local data tells us a lot. We can't really rely on previous data, but the concept here is that 270, 272, 280, 285, there's a lot of support below the price that's starting to build. So folks are adding to their position. This coin is getting more and more, it's getting stronger and stronger. And the likelihood of a breakout is getting higher, partially because we're starting to see our liquidation delta shifting gears here. And if we take a look here, we can see this is very similar to Solana 2. It's just that Solana is closer to its resistance range, but we can see 700 million, and we're now down to about 300 million in shorts. So that's a good sign showing us that shorts are starting to lose control. If we look at the last 7 days here too with liquidation, we'll probably be able to see a significant imbalance here to the upside, which we do. There's that $3 level towards about 320 is a local range, possibly even 340. So I think $3 to 320 is a distinct inevitability at this point for this coin, especially if Bitcoin can continue to run and hit its 116 to 117K targets. So let's look at the last daily time frame really quick before we compare these coins and just kind of understand where we're at here. We're pretty well overextended to the downside. And as you could see previously, we had an 8 on TD sequential, letting us know that reversal was imminent. It dumped hard because of the fundamental catalyst, but it was also it was planning to pull back anyways, right? So at this point, if we're at a 7 now, worst case scenario, we probably only have about 1 or 2 days worth of continuation lower or sideways before the next continuation higher. This is a very similar structure here to Solana. Money flow index is high, and then of course we got our RSIs below 50. So generally, just kind of a mixed bag of garbage on the weekends, from this weekend, of course, with low volume, but also just in general. Daily time frame, there's not a lot of signals here. If you hear somebody online saying that there's hidden bullish divergences on the macro structure, please post them in our Discord and post their stupid thumbnail in here too for us, just so we can be aware of who are the idiots out there, because we really need to start understanding that some folks have a lot of incentive on why they take trades, and unfortunately, from what I understand, majority of my competitors, they're going to be incentivized by monetization, and obviously that's they're just going to kind of tell you what you want to hear. So I'll never do that, but it's okay. Either way, let's look at SUI and just double check the 4-hour time frame and recognize that money flow index is high, albeit it's no longer factoring in that weekend dump. So it's going to give us some false positives, but the good news is this coin, unlike others, is getting closer to 50 on the RSI. Its MACD is starting to swing up here. Its oscillators are increasing. So we're more likely to see further upside because of that. We zoom in a little bit further here too. We can see our local shelf here, our local high of 285 is now potential low for us. And also you could argue the same thing about that previous 275 level too. Because if you zoom in a little bit further, we can see a nice little range here of a retest, that previous high working as a new low. So those are just little things I like to look for. The smaller, lower time frame structure for this coin is better than most other coins. So I'm still bullish on this coin here for upwards about 3 to 315, pending Bitcoin doesn't take a significant nosedive here soon. Okay, and that's a possibility too. We can't rule it out. But Bitcoin's kind of in this transition right now, folks. And as we're transitioning, there are some coins that are looking better than others. Let's take a look at XRP next and see what's going on with that guy. All right, so jumping on into the back end for XRP, let's go ahead and get this guy here. Let's go ahead and do the last 7 days of open interest and just kind of see if there's any supports here for us locally. So zooming in a little bit here, we can kind of see that There's a previous resistance at 275, but not a ton of open interest in the current range. I mean, it's kind of spread out all over the place. So while this is good, it's not really super telling. If we look at liquidation delta, we can recognize that we are now in the green. So this is actually very good. This is one of those scenarios that's unlike other coins right now, telling us that XRP may be a better proponent for further upside based on the simple fact that we're seeing more longs and shorts now in the market, and that dynamic has shifted. So while other coins are shifting, this one has fully shifted, letting us know the bulls are in mostly in control right now. And we take a look at the last 7 days of liquidation. There's not a ton, honestly. There's a little bit at 265 to 267. So if you're going to consider securing profits or taking along, make sure that you secure profits closer to your local high here at about 264, just to ensure that you walk away in the green. You're not being super greedy. Keep in mind though, macro structure, 275, there's some liquidation up there too, is that key level resistance for this coin. Okay, so just something to be mindful of. Taking a look at the daily time frame for XRP. It's still pretty terrible. Keep in mind, and most macro structures are going to be horrible. Once more, just to reiterate, our local support, we spent a lot of time at 275. We retest that level 1, 2, 3, 4, 5, 6, 7, maybe 8 times before we blasted straight through it. So that's what the presumption now moving forward is, that 270 to 275 is going to be a solid resistance range for us. Okay, so please understand, if you're going to try to take along to the metaphorical moon because some idiot tells you to do so, and this is an example of what that looks like, then I would just, take a moment to think about it. Take a deep breath and try not to be an emotional trader, okay? Because the truth is, averaging into your position on XRP is great, all well and good, but from a leverage standpoint, holding a trade open for however long is going to just eat you up on fees. It doesn't make a ton of sense. Don't be one of those guys. Anyways, 275 is the resistance for us here between 275 and 270. All right. So now that we've reaffirmed that and understand that, we can see that pretty much everything else is identical to other coins too. We have a significant bounce off 30 on the RSI. We've got stochastic swinging up, but MACD is still kind of diverging. It's actually starting to lose this momentum, which is good, showing this coin is more stronger than the average coin. Okay, so far SUI and XRP are both looking pretty decent in the way that they're structured here so far. Now let's look at the 4-hour and then quickly compare the lower time frames just to make sure we're doing our due diligence here. And if we look at the XRP on the 4-hour time frame, we're still under majority moving averages, right there at 50 on the RSI, which is still mostly bullish. It's trying to break bullish, right? But hasn't truly yet. Stochastic swinging down, MACD's converging. Money flow index is looking kind of funky, but as per usual, it's always like that because we have these large candles dropping off. So 4-hour time frame isn't like super indicative. It does tell us, however, we are pretty well overextended, unlike other coins. So we may actually have to expect or want to expect a lower time frame divergence or a shorter, a pullback here soon, just based on the simple fact that the price action has moved up so quick. So looking at the 15-minute time frame, left-hand side is Bitcoin, right-hand side is XRP. What do you see? There's quite a difference there, right? We've got an ascending broadening wedge here versus descending. So it's almost the exact inverse here. So what this basically just means is that a breakdown is more likely for XRP based on just retesting this higher low pattern, but also we want to presume this trend will continue because our liquidation delta has shifted. So the presumption is that XRP should go higher. Do not attach yourself to a smaller time frame pattern. The lower the time frame, the less reliable the patterns are. I'm simply giving you these patterns here as kind of a descriptive understanding or just kind of an easy way to see things, because it kind of helps you understand, momentum shifts and obviously those potential divergences. But if we look and we kind of zoom in though, last 4 hours roughly for both these coins look very much the same. So XRP is starting to align itself with Bitcoin. So under the presumption Bitcoin pulls back, XRP will too. But I do think from a macro structure, we're more likely to see 270 to 275 for XRP than we are to see 240 or lower. Okay, so those are my thoughts. What are yours? Why don't you comment below? Please provide some comments. Don't forget to like the videos, and look forward to working with you. If you want to become a better trader, CryptoCache.tech is a site, link down below. Don't forget to take advantage of our October sale too, folks. The details are in our Discord and of course all across our social media. And the concept here is just that, I've never offered a permanent access before. There's only limited slots available. So make sure you take advantage of that. We've already got 15 people that bought up those permanent access slots already so far this month. So just keep that in mind. That's all available for you. Feel free to reach out if you have any questions. We'll look forward to seeing you in the next one. Have a good rest of your day. Take care.